Welcome back to Main St Informant. In this channel, we provide information related to wealth, money, power, finance, business, and economics. In today's video, we will be talking about the economic crisis, crashing GDP, and all-around protests in China. Are we seeing a financial disaster coming? China is in chaos. Bank-related protests are becoming more widespread. People are becoming frustrated with how ineffective the government is. The Chinese Communist Party, or CCP, has sent tanks to maintain stability because it is so terrified. The Chinese economy is not going to have a good 2022. Even though the year is just halfway over, the Chinese economy is already burning and collapsing on many different levels. What formerly appeared to be a calm nation with everything in order is starting to reveal its weaknesses as nothing more than a house of cards in disrepair, a country built on sand. The country's initial GDP growth forecast have been cut downward to 4.3% in 2022, which is approximately 1% less than the previous expectations from December. What does the collapse of the second largest economy in the world mean for the rest of the globe is the question that arises. What does your financial situation and the economic collapse of China entail? Let's just review the situation. Imagine a situation in a first world nation where property development firms are so frantic to sell homes that they implement a barter exchange system. To encourage the sale of properties, a few developers of real estate in China's eastern provinces use this strategy. The developers are now taking payments in produce in light of the expected 25% fall in real estate sales. You did understand me correctly. Produce can now be used as a down payment for homes and apartments. Evergrande's financial default last year served as the catalyst for the current downturn in China's real estate market. Since Evergrande, deadlines for debt repayment have also been missed by Shimao and Suna China Holdings. This sign of excessive debt is now posing a threat to the sector, which accounts for close to 30% of China's GDP. Due to COVID-19 lockdowns and declining demand, several developers are having trouble paying off their loans. Additionally, the root causes of uncontrolled property growth are not addressed by these solutions. Because of new changes that make life even more intolerable, China's real estate market is getting worse. Home buyers are becoming increasingly irate and threatening to quit making mortgage payments on incomplete projects after the Evergrande scare and developer problems caused by excessive debt entered the market. Beijing is now taking notice of this movement, which gained steam on social media and is now gaining a large following. More than 85% of Chinese homes are now sold through pre-sales, compared to only roughly 50% in 2005. Loan applications are accepted months or even years before a structure is complete. However, it appears that developers won't be able to uphold their commitments given the slowdown in projects since 2020 brought on by the pandemic and the liquidity problems that soon followed. Consequently, the mobs are gathering. The movement against the pre-sale system puts nearly $350 billion in payments at risk. You can anticipate a situation much worse than the Evergrande disaster if all of these folks make default payments. The Chinese government is aware of this wildfire risk and has already taken action to restrict it. The slowdown in China's real estate market has been going on for some time, but since the movement feeds on itself in a circle, it is gathering momentum very quickly. More projects are being put on hold as developers' financial flow dries up, which confirms and infuriates more customers. Now, consider this. If property in general accounts for 30% of China's GDP, how devastating would it be if people started skipping payments? How much of an impact could the Chinese crisis have on your financial investments if the Evergrande issue was strong enough to affect American markets as well? China's covert backing of Russia's invasion of Ukraine since February 2022 has only reinforced rumors about Beijing's intention with Taiwan, heightening concerns about how the world may respond should China launch an attack. The Chinese economy has not benefited from this type of speculating or being on edge since its partners do not fully trust China's stance, particularly with regard to Taiwan. This is hardly promising for a nation that engages in substantial trade. It has never been a secret that China wants to invade Taiwan to reassert its dominance over the island nation. Even though a full invasion is yet to happen, there is a constant threat of its possibility. This alone keeps not just Taiwan, but the rest of the world on edge. Taiwan has cultivated relationships with some of the biggest economies in the world, which is a dilemma. Taiwan has shifted closer to the United States as a result of China's authoritarian turn under leader Xi Jinping and deteriorating relations with Washington. Beijing was enraged by this, which prompted it to put greater pressure on Taiwan and deteriorate diplomatic ties. The Quad Summit that was conducted in Tokyo at the end of May 2022 was unable to handle this matter because it had become so dangerously tense. The United States President Joe Biden said that the United States would take military action if China attempted an invasion of Taiwan. That poses a serious threat coming from the head of the free world. It serves to highlight how seriously China's trading partners are being offended by its stance, which has an impact on China's economy. China's foreign policy is also enraging China's other trading partners, not just the US. There are also other countries there, such as the United Kingdom, expanding the list of potential retaliatory troops. Given that it's already in a fragile position, China just cannot afford this at this time. It will be devastating for a country like China to experience both domestic economic problems and foreign economic antagonism at once. The rate at which China's economy will collapse if their aggressive measures are kept up will be, well, fairly worrying. Taking President Biden's remarks at its value, any military action by the United States will inevitably pull down the world economy. Your financial goals will undoubtedly be impacted by this, without a question, and all of it had a big impact on what China did. Smaller local banks in China's Henan region are adding fuel to the economic inferno. The situation facing Chinese banks is precarious. The ability of the CCP to shield citizens from fraud and the financial system as a whole are both losing popularity among the populace. You see, China is distinct in that there are a lot of people there. Therefore, even though only a small portion of its population does, there are still over 1 billion people living there. China has more than 4,000 separate banks operating in rural areas to cater to different segments of the population. One of the major issues with having a financial system that is so dispersed is that these banks are extremely vulnerable to bankruptcy if something goes wrong. Rural banks will attempt to circumvent banking regulations by accepting deposits online and providing relatively high interest rates when compared to big banks in order to survive. The only issue here is that the banks lied to their clients. Customers were misled into thinking that a typical savings account would earn them 4% interest. Not bad, but they were really investing their money in investment products. The key distinction is that Although money in savings account is secure and is covered by the CCP in the event that a bank fails, money in investment products carries risk and is not covered by the CCP at all. In addition to lying, these four banks were not acting as a bank should have been acting. The depositors' money was being completely accessible to one of their investors, and the investing corporation had total control over how to spend it. The worst thus occurred, and one of the investing company's chairmen fled with $6 billion in depositors' money. Depositors only became aware of this because the banks would continuously stall their attempts to withdraw their money. This seemed really suspicious. In order to find their money wasn't there, some depositors traveled across provinces to the bank's office. They planned their actions at this time to draw attention to regulators' incompetence. How can bank officials permit deceptive advertising by banks to go unchecked? How is the use of depositors' money by banks not subject to oversight? What happened to the $6 billion? The likelihood of bank runs increased as the protests gained momentum throughout China. The possibility that this problem may not be limited to these four institutions is more news that is emerging from this situation. In China's majority of rural banks, this may be the standard. In light of this and the boycotts of mortgage transactions that have been covered, China's banks are on the verge of a liquidity crisis. If the relationship between the public and the banks is not repaired quickly, China's financial sector may descend into a perilous spiral. I sincerely hope that you found this news to be helpful. Please like, subscribe, and hit the notification bell for more specifics on China's financial troubles or global wealth, power, finance, business, and economy. You can check out more videos on the channel and share. It will help my videos to reach more people. See you in the following.